Welcome back to the channel. I'm Algabot, and this is where we break down automated trading strategies for MetaTrader 5 in plain, easy-to-follow language. Today we're studying an expert advisor called Pivot RSI Thrust. As the name suggests, this strategy blends two classic ideas: rolling pivot points, which mark out resistance and support, and the relative strength index, a momentum oscillator. It's a momentum continuation breakout approach. Over the next few minutes, I'll show you exactly how it decides to enter, how it manages its stop loss and take profit, and we'll walk through both a long and a short example on a chart together. Let's start with the big picture. Pivot RSI Thrust is an expert advisor, which simply means a program that watches the market and applies a fixed set of rules automatically inside MetaTrader 5. It runs on a single chart and a single time frame, the one you attach it to, and it can be applied to instruments such as major foreign exchange pairs. Everything it does is calculated on that one primary time frame. The engine has two main components working together. The first is a rolling pivot. Instead of using yesterday's classic daily pivot, this strategy looks back over a window of recently completed bars, by default 24 of them, and from that window, it computes a central pivot point along with a resistance level called R1 and a support level called S1. Because the window rolls forward bar by bar, these levels constantly update to reflect the most recent price action. The second component is the relative strength index, or RSI, a momentum oscillator that moves between 0 and 100. The strategy uses RSI as a confirmation filter. It wants to see genuine momentum behind a breakout, but it also wants to avoid entering when momentum is already stretched and possibly exhausted. So it defines a momentum band rather than a single line. A third piece, the average true range, or ATR, measures how much the market is currently moving. Pivot RSI Thrust uses ATR to size its stop loss and take profit, so the protective levels adapt to volatility instead of being fixed distances. Who is this style of approach suited for, educationally speaking? It's designed to illustrate momentum continuation breakouts, the idea of trading in the direction of a decisive push through a key level rather than fading it. Like every strategy, it will have winning and losing trades, and trading always involves the risk of loss. Nothing here is a recommendation. It's a study of how the logic is built. Now let's walk through the exact logic, step by step. The expert advisor works on completed bars only. It uses a new bar gate, meaning it evaluates its rules just once per bar, when the previous bar has fully closed. This avoids reacting to every flicker of an unfinished candle. On each new bar it first builds the rolling pivot. It scans the look-back window of completed bars behind the most recent one and records the highest high and the lowest low over that window. The central pivot point is the average of that high, that low, and the last close. From there, the resistance level R1 is calculated as 2 times the pivot minus the low, and the support level S1 is 2 times the pivot minus the high. These are standard pivot formulas, just computed on a rolling basis. Next comes the entry test. For a long, the strategy looks for a fresh cross. The bar before the breakout must have closed at or below R1, and the breakout bar must close above R1. That word fresh matters. It only acts the first time price closes through the level, not on every bar that stays above it. On top of that, RSI must confirm momentum. The strategy uses a trigger of 8 and a cap of 22 around the 50 midline. In practice, that means RSI needs to sit between 58 and 72. Above 58 shows real bullish momentum. Below 72 means it isn't already overextended. The short side mirrors this exactly. The prior bar closes at or above S1. The breakout bar closes below S1, and RSI must fall between 28 and 42. That's the bearish momentum band, weak enough to show selling pressure, but not so weak that it looks exhausted. When a valid signal appears, ATR sets the protective levels. The stop-loss distance is 1.6 times ATR, and the take-profit distance is 2.6 times ATR. That gives a reward-to-risk profile of roughly 1.6 to 1. For a buy, the stop sits below the entry and the target above it. For a sell, the stop sits above and the target below. There's also a small guard, so the stop is never tighter than the current spread allows. Finally, the strategy enforces discipline. It holds only one position at a time per its magic number, and after closing a trade it waits a cool down of 2 bars before considering another. This keeps it from stacking entries on the same move. Here's the heart of the MQL5 code as it would look in MetaEditor. At the top are the input parameters you can adjust in the EA's settings. LookbackBars is the pivot window, set to 24. RSI period is 14. RsiTrigger and RsiCap, 8 and 22, define the momentum band around 50. ATR period is 14, and the two ATR multiples, 1.6 and 2.6, size the stop loss and take profit. Cooldown bars is 2, and lots is the fixed trade size of 1/10. Just below, for Boolean conditions, do the thinking. Fresh up is true when the prior bar closed at or below R1 and the breakout bar closes above it. Fresh down is the mirror through S1. The RSI bull gate is true when RSI sits between the trigger and the cap above 50, and RSI bear is the same below 50. Now look at the buy block. The condition reads, if fresh up and RSI bull. When both are true, it takes the ask price as the entry, places the stop a distance of ATR times the stop multiple below it, places the take profit ATR times the take profit multiple above it, and calls trade.buy with the fixed lot size and those protective levels. The sell block, in the else if, is the exact mirror. When fresh down and RSI bear are both true, it takes the bid as the entry, puts the stop above and the target below by the same ATR multiples, and calls trade.sell. Both sides share the identical structure, only the direction flips. Let's bring the whole strategy to life on this chart. Up top you can see the price candles, and crossing them are 3 dashed lines from the rolling pivot. The R1 resistance at 1.0860 in red, the central pivot point at 1.0840 in gray, and the S1 support at 1.0820 in green. Below the price is the RSI subpanel, with our momentum bands marked, the bullish band between 58 and 72, and the bearish band between 28 and 42. Start on the far left. The first few candles drift sideways, coiling just beneath the R1 resistance line. Notice how each close stays under that red level. There's no fresh break yet, so the strategy simply waits. Down in the RSI panel, the line is loitering around 50, neither bullish nor bearish. No signal. Then watch the fifth candle. It opens near resistance and pushes decisively higher, closing clearly above the R1 line for the first time. That's the fresh cross the strategy is looking for. And critically, at that very same moment, RSI climbs up to about 62, right inside the bullish momentum band, above the 58 trigger, but comfortably below the 72 cap. Both conditions are satisfied together, so the buy entry marker appears. The stop loss is placed below, a distance of 1.6 times ATR, and the take profit is set above at 2.6 times ATR. From there, momentum carries the move. The next candles build one green body on top of another, each making a higher high as price extends away from the broken resistance. The RSI stays elevated in its band, confirming the push has real strength behind it. By the eighth candle, price reaches the take profit target and the long trade is closed for a gain. That's the momentum continuation idea in action. Enter on the fresh break, ride the thrust to the target. Now the picture changes. After tagging the target, price stalls and rolls over. The candles turn red and start stepping down, sliding back through the pivot point and pressing toward the S1 support. In the RSI panel, momentum is fading fast. The line drops back through 50, then through the 42 bear trigger, sinking into the bearish momentum band. Watch the candle that closes below the green S1 support line. That's the fresh downside cross, the mirror image of what we saw earlier. At the same time, RSI is sitting around 36, squarely inside the bearish band between 28 and 42, confirmed selling momentum, but not yet exhausted. Both conditions line up, so the sell entry marker prints. The stop loss goes above the entry and the take profit below, using the same ATR multiples. The final candle follows through to the downside, extending the break and reaching the short take profit target, where the trade is closed. Across both examples, the pattern is identical. A fresh close through a pivot level, RSI confirming momentum inside its band, and an ATR-based stop and target framing the trade at roughly 1.6 to 1. Of course, not every break follows through. When price reverses back through the level instead, the protective stop is what closes the trade, and losses are a normal part of any strategy. And that's a complete walkthrough of the Pivot RSI Thrust Expert Advisor. We saw how it builds a rolling pivot from a look-back window, how it waits for a fresh close above R1 or below S1, how RSI confirms momentum inside its band without being overextended, and how ATR frames the stop-loss and take-profit on every trade. We also stepped through a long and a short example on the chart, candle by candle. Remember, this video is educational content only and is not financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and drop a comment with the strategy you'd like me to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.